Right, so I'm going to be talking today about mixed use properties. Yeah, so this is one of the investment strategies, and it's one that I like a lot because there's quite a few advantages with this that we're going to look at as we go along. So, what is a mixed use property? A mixed use property is a property that combines residential and commercial within a single development. So we're going to look at like one small one and one big one as examples. So this one on the left is where we've got shops on the ground floor. This could well be like some sort of high street of some town. And then above the ground floor of the shops, we've got floors. So here we've got a couple of floors. And these floors, they could either be part of the shop, so used as maybe additional retail area or storage office space, or they might already be operating as flats or maisonette above the shop. Sometimes it's obvious, not necessarily here, in that sometimes you've got an entrance to the shop and then you've got a second door somewhere by the side, which will be stairs going up to the first and second floor. Sometimes the entrance to the flats are behind the shop. So also when we're talking about mixed use, we can start with the property. If, for example, on this shop, it happened that the shop is both the ground floor first and second, it's possible to, obviously, if there's a tenant in there, need to agree with them, or maybe the tenant's only occupying the ground floor on the commercial lease. So it's possible to buy a commercial property. Often, if it's on a high street, we've got to keep commercial on the ground floor, but it's also like a good thing anyway because it's mixing things. And then possible to convert the first and second floor into residential. So we might be buying a property that's already mixed use, or we might be buying a property that is commercial and we're going to convert it to mixed use by converting the uppers into residential. We've got a bigger example here. This actually is where I have my offices. It's close to St James Park Station. And here we've got an example of everything together because on this part here is actually ground floor, first floor, and then there's a second and third floor there. On the ground floor, everything is commercial. So it's like shops, there's a barber shop, coffee shops, and things like that. Then the first floor, second floor, and third floor are office space. So again, commercial, but a different type of commercial. And then from the fourth floor up to the 10th or however many floors there are, it is residential. So this is new built mixed use investment. So some of the financial advantages of mixed use properties, diversified income streams. So we've got the money coming in from renting out the commercial part of the property. Typically, that's going to be on a lease, a 5, 6, or maybe a 10-year lease. Obviously, we've got the advantages of when we've got commercial tenants in there, generally they're looking after everything inside the property. Enhanced cash flow because we like combining different things, and we end up with higher cash flow than only commercial or only residential. Property appreciation, that is, we can often get immediate appreciation, that means gain in value. Because if you go back to this previous one, when a property is entirely commercial, generally the price per square meter of vacant commercial is less than the price per square meter of residential property. Sometimes we're buying properties that might be at a price of £1,000 per square meter as commercial, And when we convert to residential, we can end up with a price of, let's say, £4,000 per square metre. And we might be spending, let's say we're spending 2,000 per square metre to convert part to residential. That means we've got £1,000 profit on every square metre. And then, yeah, resilience against market fluctuations. And this is an important one, portfolio diversification. If we've only got residential, obviously we're subject to all the changing laws and changing taxes. Residential is quite political. So, yeah, different governments can make changes on how landlords are taxed. Commercial is a lot more stable. On commercial properties and on a mixed use property is classed as commercial. So we might have got a property which has got a small shop at the front. Hi, Vasco. Yeah.
Right.
Yeah. Yeah. So we might have got a property that's got a small shop at the front. Behind it might be a flat and then several floors of residential above. It's still considered mixed use. And as regards stamp duty, it's non-residential stamp duty. And that can make significant changes. For example, looking the other day at a property in South London for £800,000. If it had been on residential, we're talking about £80,000 of stamp duty. On commercial, it's 25,000. So there's like significant difference. And yeah, even if it's almost entirely residential, we're still paying commercial stamp duty. A few considerations, obviously, to make sure that we really are classified as commercial. This means, in general, there are some exceptions. It means that the property must be on the same title. If we're buying a separate title for the residential, a separate title for the commercial, then the stamp duty is going to be calculated on each title. So we've only got the advantage on the commercial part of the property. Mortgage requirements. When we're getting lending on a mixed-use property, it's more complicated than simply buying a buy-to-let property. Sometimes it's possible to buy buy-to-let properties using what's called a desktop valuation. So the lender isn't actually sending someone out to value the property. They're looking at comparables, looking at photos of the property and deciding on a value. In the case of a mixed use, there's always going to be a value a visit, and the cost of the professional valuation for commercial property is typically in the range 500 to 2,500. I'm talking about properties up to, let's say, £1 million. If it's more than that, those prices can increase. But there are specialist lenders and obviously good brokers who can source suitable finance. And also when we're borrowing on a mixed-use property, it's the same on commercial. Generally, the maximum loan to values are 70%, which means we need the minimum deposit of 30% of the property's value. By the way, if there are any questions as we go along, please don't hesitate to ask them as we go rather than completely at the end. Insurance considerations also. Insurance requirements are, it's a bit more complicated finding insurance on mixed use properties, and they're generally using specialist brokers because obviously the risks are different. And sometimes when lenders are involved as well on mixed use properties, the lenders are going to be named on the insurance policies, and sometimes they will also be put on there as something which is called first payee, which means if there's an insurance claim, the first amount of the claim actually goes to the lender. They're making sure they're protecting their interest in the property. Planning permission and permitted development. If we're buying a property that is already being used as a shop with flats above, and these flats are on council tax, and it's already an established use, then we don't need planning permission. And that also actually is very important, because if you've got buying a property where and we're always looking actually, when we're looking at mixed use properties, we're looking at the valuation office agency to understand what are the commercial rates on there and which parts of the property are commercial. And then by deduction, you can't go online. You can go online and find the business rates and the business rates valuation for any commercial property in the UK. In the case of a residential property, you can't do this online. So there we do it by deduction. So if we're buying a mixed-use property that we're actually looking at one at the moment in Devon on behalf of an investor who has to understand what it's worth, what are the possibilities. The property is 400 square meters, and on the business rates, and it's over 3 floors, we found out that only the ground floor and first floor are on business rates, and the rest is residential. Why is this extremely important? If we're buying, let's say, a rundown, you'll see one case study, one that I bought, I think 3 years ago, a rundown property where you're going to be renovating the flat. If it's already classed as a flat, even if it's got no insulation and it's like poorly, doesn't have got poor sound insulation, etc. If it's already a flat, that's fine. You can renovate it to whatever state you want. If, however, you buy a property that's all commercial with the aim of under permitted development or using planning, changing the uppers into flats, then that is considered a conversion from commercial to residential. And when we convert a property, then all the current building regulations for new builds is slightly different, apply to that property. So don't be misled. Buying a property that's commercial, converting part into residential, we have to take care of everything that's on here. And there's quite a lot of stuff on here. So sound insulation, that can be actually very tricky. We're doing one at the moment, a mixed use, well, a commercial to, actually not mixed use, this one is commercial to full residential. So we have to do basically break everything between the floors, break all the ceilings, and do new construction of the ceilings using special techniques so the sound doesn't travel from one flat into the next. It's not difficult to do, but it's a lot of work and obviously has costs, and these costs need to be taken into account. And then when we're doing conversion, we've got all the same fire safety rules that apply to new builds. So we've got the fire compartmentation, which means all the fireboarding between separate areas, especially between commercial and residential, and between each residential use. In some cases, we may need to install sprinkler systems, obviously fire detection and alarms, emergency lighting, fire doors, and the fire risk assessment. So yeah, be aware that might need to deal with all of that. And then there's additional things, energy efficiency. You can buy a mixed use property which has got flats already classed as flats and not worry about having to significantly improve the EPC. If you're converting part of the commercial, the uppers, into flats which weren't already flats, then you've got to meet at least EPC C and all the other building regs requirements. Comparison between. Is it okay if I mute you, Vasco? Yeah. Yeah, in fact, there's a bit of background noise. Yeah, so comparison with pure residential investments. So mixed use properties, obviously we've got two sources of income, the residential and the commercial. We've got a higher level of risk diversification on mixed use properties. Tenant retention, it's marginal, but if it's like a new build, like a nice area where you've got like shops below or proximity, then that can give better tenant retention, higher potential in quite a few cases for property appreciation, so gain in value. Management, obviously, it's a bit more complicated to manage mixed use properties because we've got the residential element and the commercial element. Before I go on to the case study, are there any questions related to mixed use properties and what we've seen so far? Okay, I'm going to press ahead with the case studies. So this first one is a real example. So this is a property that I purchased just over 3 years ago. So this is in a small South Wales town, probably about 40 minutes from Cardiff. So this is what it looked like when I bought it. I haven't actually got new pictures at the front, but it looks a lot nicer. So basically, it was a stonemason's showroom, and then with um, a really poor flat above. But the flat was already a flat; it was already classed as residential. So I bought this for 80,000. It was vacant and in quite poor condition. Spent around 45,000 on it. So the flat above converted that into three ensuite rooms and a shared kitchen and did that up for short-term accommodation. The rear of the shop, so on the ground floor, there's a double frontage at the front, but behind there was a reasonably extensive storeroom. So I converted that storeroom into a studio flat. There's access from behind the flat, from behind the building, both to the studio flat and the upstairs. And on the shop, only did like minor upgrades, like sort of redec coat of paint everywhere and updated the electrics so the electrics are compliant. Generally, when we're doing commercial, we don't have to do a maximum spend on it because when someone is going to rent the commercial property, they're going to want to fit it out based on their requirements. Sometimes if someone's going to like spend quite a bit of money on it, they'll want to negotiate a rent-free period for 1 or 2 months. And generally, if we see they're going to add value, we're happy to agree with that. So this we got ready within 3 months and got it income producing. The current value is around 200,000 for this property. This includes the value that we added through the renovation. It reflects the low cost at which we're able to negotiate the purchase, and there's also an element of capital appreciation because prices in general are increased maybe by 10-15%. But we can see in reality 80,000 plus 45,000, that makes 125,000. So we've got 75,000 profit or equity in there. So that's really good for as investment type criteria. And what's the income of this? This is income before mortgage costs. So we've got £500 per month on the shop and the studio and ensuite rooms. We've got £1,500 per month of net income. So that's after, because we're doing serviced accommodation, that means once we pay the council tax, utilities, management fees to the managing agent, etc. On this property, we're left with £2,000 per month for, basically £125,000 in. So this is a really good deal, and it's still possible to find deals like this. Generally, because when we commercial, we've got low value per square meter, and when we start, changing it to residential, then we're significantly increasing that. Any questions on this case study? So we'll go on to the next two, which are not well, they are case studies, but these are deals that we have available that we've sourced. Both of these, in reality, because these are really good deals, we're structuring these as joint ventures for investors to come on board with us on these projects and get obviously the return from them. So here we're talking about this building in white. So again, we've got this is a butcher's shop on the ground floor. There's a flat with 2 floors. It's quite big, 2 floors above. And also we've got behind there, it goes back maybe something like 40 or 50 meters. And there's some number of outbuildings that we're looking potentially to convert into studio flats. So there we've already got an element of residential, but to increase the income on it, we're going to be converting it into a 4-bedroom HMO. We'll be looking to, and all our figures are based only on converting the actual main building. What we can manage to do with the outbuildings obviously depends on planning, and that will be additional income for us. On top of what we've already, on top of the main figures. So this one, approximate idea of the figures. We only need 80,000 to get into this deal because we've also negotiated on this property what we call I've forgotten what we call them now. It's like it's like a creative deal. We've agreed with the seller an exchange and delayed completion. So you're going to exchange contracts, but and when we exchange contracts, we'll have the right to access and start converting the property, doing our work on it. But we're going to complete 12 months later. So we only need to pay, and the purchase price is just below 200,000 on this one. So we only need to put the deposit of 20,000. Then obviously the seller is committed to sell. We're committed to buy the property. Then we need to find the 60,000, which is the cost to renovate and convert it. And we can do all that probably within 4 to 5 months of exchange. Then we've got 6 months where we've got the income coming in and we haven't yet got to buy the property. And then by that time, we can go and get bank finance, which will enable us to complete on the purchase. And from this 80,000 money that goes in from the joint venture partner, they're going to be getting they're going to be getting half of that back. So they'll be leaving 40,000 in the deal. And on that 40,000, the expected annual return is 25% of that investment. Yeah, so these mixed use properties can, especially when we've got the creative deals, can be really attractive. On this property, in its current state, possibly it might get 10,000, 12,000 income as like a really tired shop and a flat that is in bad condition. When we've done our stuff on it, we're looking at a annual income of 30,000. That obviously is before finance costs. And then the last one, we're also in the process of negotiating an exchange and delayed completion on this one. So here we've got it's an office building. It's a listed building, but it's only the outside that is listed. This is 18 miles from Bristol, and it's right next to a new house development of 400 houses. In fact, it's a developer that's selling the property because they were using it as their site office. So what the aim is here is obviously we'll be buying this, and it's currently only commercial. We're going to be creating basically retail or professional type units on the ground floor. On the first and second floor, you can see there's a really high ceilings. We've got almost 5 meters ceiling height on each of these first and second floors. so we can do flats with 2 floors on each floor. So we're looking, and we've got, I think, currently a total surface area of something like 1,200 square meters, which if you do a fast calculation in your head, you'll see that on this one, we've got a purchase price of £750 per square meter. In this area, the residential properties of average value, of average state, go at 3,500 per square meter. So we've got on here a gross development value of 4 million and input costs of 900. Obviously, we're going to have finance costs on here, but we've got input costs of 2.6 million. So even with 400 of finance and planning and other types of costs, we've got a clear million profit on this project. And yeah, which it goes to show you the advantages and the type of deals we can get on mixed use properties as opposed to pure commercial. I'm trying to think what else to say about this one. Yeah, we're looking at, depending on the investors that come on board with us on this one, either we keep everything and refinance and keep for the ongoing income, in which case the flats, we'd be operating those most likely as short-term accommodation. Or the alternative exit strategy on this one is to sell all the flats. If we sell all the flats, we're going to be repaying the investment plus something like, on our figures, something like around 500,000 profit. And we then have, in inverted commas, free of charge, the complete ground floor, the freehold of the building, and the ongoing commercial, ongoing commercial income. So that is, one of the exit strategies when we're doing conversion from commercial to mixed use, sell off the residential to pay back all the lending, the investors, and some profit, and then retain the commercial. Sometimes it might be doing a bit of each. We're also looking at this one at the option of doing half of it smaller studio flats for like Airbnb stuff, retaining the ground floor commercial, and doing maybe 6 residential flats that we'll sell off at the normal price to reduce significantly the lending on there. So yeah, there are different ways in between of doing things. Are there any questions on these case studies?
No, no questions for me. Thanks, Trevor, for so
Right.
far straightforward for me.
Yeah. Okay. And then the last slide's conclusion and next steps. So yeah, mixed use properties offer a blend of stability and potential for growth. And yeah, when we're getting into the bigger ones, obviously, if you haven't done this before, it's strongly recommended to do it as a joint venture with an experienced developer and investor, or for people that have got a lot of experience and able to look after these projects. We can and we are routinely sourcing these properties for investors. So yeah, if there are any more questions, please ask away. Otherwise, yeah, if anyone is interested or anyone listening to the recording is interested in any of these specific deals, then send me a direct message and we can share more information about them. So any remaining questions or maybe comments? Maybe someone's already been involved in mixed use properties and has got something to potentially add to the discussion.
Trevor, for me, I think the only question I want to ask or that I can think of right now is you didn't mention the kind of minimum entry in terms of contribution. If someone wants to be involved, what generally you would be the minimum the person would have to bring in?
Yeah, it depends on the size of the project. If it's like the bigger ones, then typically we're talking about a minimum input of 50,000. And then when it's like the smaller ones, where if someone comes, sometimes it's more a question of someone might come to me and say, look, I'm really interested in one of these joint ventures, but I've got 10,000 or 20,000. Can I come into it? And generally the answer is unless obviously it's all been sold out, then we'll say yes, you can come into it. And that's sometimes the smaller joint ventures like this one. If I go back to we call it the butcher's shop one, someone that comes into joint ventures like that, because people that invest, they can be investing in fact for two reasons. A, obviously because they want the return on the money, and in these type of deals there's a really good return on the money. And the other reason for people coming into them is because when someone's in a joint venture, obviously they have access to everything that's happening on the project, so they can see how we're organizing the lending, they can see how we're paying and what are the issues with the planning, with the building regulations. They can see if we're going to be doing serviced accommodation, what are the issues with that. And people use it like as a learning experience to learn from it in doing it or coming into a project with someone else, to afterwards potentially end up doing the same thing themselves on a project that they're going to finance and own 100%, or potentially come into another joint venture with myself or other people on similar projects. Does that answer your question?
Yes, thank you, Trevor.
Yeah. Any other questions or comments?
Can I ask us what might be a slightly peripheral question, please?
Yeah.
So I was just your £3,500 pounds per square meter figure that you quoted.
Yeah. If we come to this last one,
Yeah.
£750 per square meter is the purchase price on this building.
750. Okay, thank
Yeah.
you. So are people starting to use? So I'm used to seeing pounds per square feet. So I was trying to convert it and failed.
Yeah, I'm sorry about that. That's my fault.
Oh,
I'm often yeah. So we're talking here about something like £70 per square foot.
okay. Right. Thanks. Yeah.
And for end value of something like I would say 340 per square foot
Ah, okay. That sounds
on residential.
right. That makes sense to me.
Yeah.
Thank you.
And when we're looking at these buildings, obviously we've got a bit of experience because it's not the first time we've done this. When we go in a building and we see the structure, we can more or less immediately estimate what is the conversion cost going to be per square meter. Because this particular property, there was actually a fire there probably maybe 20 years ago. So the roof structure is completely new. And the structure between the floors, it's like solid concrete lintels and concrete screed. So the structure is in perfect condition. So I can't remember. We've got all the detailed figures in our Excel file. I think this one we were looking at something like 1,000 per square meter for the conversion.
Okay.
And sometimes when a property is in, like if we're going to have to redo the floors and things and sound insulation and stuff, sometimes we might end up being as much as 2,000 per square meter. And on a building like of this size, we've got to add specific costs for plant utilities, and potentially on here, even though we don't specifically need one as per building regulations, we probably want to install a lift.
I've started thinking about my preparation. I've started thinking about my preparation.
Yes.
I've started thinking about my preparation.
Yeah, hello, was
I
that a
have
question?
started.
Yeah, something strange there. Yeah, if yeah, maybe Alec, if you want to write a question or yeah, write a question to me afterwards, we can answer that. Any other? Did that answer your question, by the way, Vasco?
Yeah, thank you very much. Thanks. So I
Yeah.
was still trying to work out how to convert it and getting
Yeah.
completely ridiculous numbers. So, yeah.
Yeah, it's I think, and I've got it in all my Excel files. I think it's approximate. I think it's 10.78 square feet per square meter.
Okay.
Generally, we just sort of to get a rough idea, we divide by 10. And interestingly, when we're talking about, and we're doing more things in square feet, when we're talking about commercial property, all commercial property and all commercial property agents are talking about lease and rental price per square meter. Like, for example, on this one, I was just talking with the agent. He was saying that if we were to do offices on the upper floors, we'd be talking about £14 per square foot. That's the annual income. However, on the ground floor for like small retail and things like that, we'd be looking at £20 per square foot.
Okay. I think, sorry, I've just realized what I did my multiplications and divides the wrong way around. So,
Yeah.
um,
Aren't you an accountant, Vasco?
yes. Yeah, 325 per square feet. But yeah, okay, this makes sense now.
Yeah, yeah. Yeah, so yeah, it's true actually. Yeah, sometimes I just tend to have in my mind square meters, but the more that we're doing in commercial, we are effectively talking a lot more about pounds per square foot.
Okay, I was just wondering if we'd gone metrics.
No,
Maybe
no, no. And the thing is as well that so on some of our projects, we've got investors from the EU.
Oh, okay.
So if you've got a Dutch, like not on this one, but we've got a project basically across the road, which
Yeah.
is it's a commercial, it's a smaller commercial to residential. It's offices into three, in fact, a maze on it and three, and two flats. If I was to say to the Dutch investor, look, we're at this much per square foot, they'll say, what are you talking about?
Okay, yeah.
Yeah, so yeah, but that does make sense.
And apologies for my, I think at some point my audio inexplicably got switched on, and I was at that time I was in two simultaneous meetings, so
Right, no,
sorry
that's
for the
okay, no
interrupt.
problem.
Okay.
Yeah. Any other questions? All right, well, thank you all for your time. Hopefully that was useful.
Thank you.
And yeah, we'll post the recording probably tomorrow. And next week, next week we're going to be talking about creative property strategies, we'll be talking about things such as exchange and delayed completion, options to purchase, and yeah, things like short leases. Yeah, just going over five or six of the common creative strategies. But when you say creative, obviously it can be anything possible that is a win-win for both the person selling and the person buying. Anything enables it to get over the line and enables the seller to sell, then yeah, it can work out well.
Where do the replays get posted? Is it do you have social media channels for your business?
I've got in fact the posts are I've got a WhatsApp group. I think actually you might be in there, Vasco.
Okay.
And I know that Open Nick are in there where we post them.
Okay.
But they also go, and I've got a YouTube channel where we post these as well.
Oh, okay. Right.
But
Thank you.
if you're okay with it, I'll post them also on your groups.
Yeah,
So
that's fine.
people in there, if they want to listen to them, they can yeah, catch up. Especially sometimes on Tuesday, there's quite a few webinars, so quite often people want to take part, but yeah,
Yeah.
they need to choose which one.
Yeah, probably the property investment group it makes sense. So yeah.
Yeah. All right, great.
Thank you.
All right. Well, have a good evening, everyone. Good to see you all.
Oh, you
See
too,
you.
Trevor.
Thanks.
Thank you.
Yeah. All right. Yeah. Bye.
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 Oh, isn't my mouse working?